This is Carmel again here with another market preview. This is for tomorrow, October 17th, 2023. I'm doing it the night before to see how I expect the market to pan out. Well, first things first, let's start off with how today went. I made a prediction that this week was going to be bearish, but so far today, being Monday, was extremely bullish. Some things that happened, which I knew I didn't want to see, was the fact that price literally kept closing. Like, remember, I was showing you guys how there was a break of market structure, fair value gap, and price closed below it on Friday's close. Let me go back to the chart so I can show you more clearly. I know it got a lot of markings, that's why I tried not to show you initially. So right here, this right here was the break of market structure fair value gap. And on Friday, if we go to the daily chart, here's Friday's price action, 1013. You see how price closed below it. And I told you that this was an usually the break of market structures are extremely strong fair value gaps. That when price retraces back into it, really does it break it, all right? But on Friday, it did break it. It broke, and what I mean by break, it can break it, or wick through it, but it usually doesn't close below it or above it if we're doing a bullish break of market structure fair value gap. But this one, it actually broke above it. And for anybody who's new and don't know what a break of market structure fair value gap is, for me, through my back testing, I'm not sure if Michael actually describes them these ways, but when I did my back testing, what I see is that when we're talking about when we're talking about a fair value gap that is created exactly where a swing high or a swing low is located, that becomes a break of market structure fair value gap. So you see this one, here's the swing high on 920 on the day of 929. And if you go right here, you see that swing high was literally broken on 10-9. But not just the swing high was broken, which would just make a market structure shift. We see a fair value gap was created where the wicks on the opposite sides of that candle basically don't touch, which means price was not efficiently repriced, meaning that price or efficiently delivered. I won't say repriced, it was not efficiently delivered. Remember, price, whenever it goes up, see right here, it goes up on one side, it has to come back down on one side. Here it goes up on one side, it goes down on this side, here it goes up, and usually it goes up to pretty much where the wick is. And if there's a gap here, you see, like right here, there's a gap, it's not efficiently delivered. So I'm not going to give us lessons on that. Once again, I'm no Michael. If you want to learn more about that, you definitely want to check out ICT's and Michael's videos directly. Go to the source himself to learn it. The point that I'm making is that in the end, this was closed below. So what I didn't want to see was price go back above it. If it went back above it, then that would keep in mind the theory that yes, price, that it is still a very strong fair value gap. And it's working as it is, and instead not working as the implied fair value gap that I was hoping it would do. One thing I notice about price is that oftentimes if price breaks it on the one candle, but then immediately breaks back in the proper direction, the immediate following candle, then it's usually still a very valid price action move, or in this case, a valid fair value gap. So here, this basically showed its true colors that price intends on being bullish. Now, that's for the day. So my theory, my thesis for tomorrow is yes, price will continue on this bullish trend. keep in mind, why do I also say that? Because it broke this high. You see, the Friday's high was 4407.75. Today's high became 4414.25, and the close is 4406. It doesn't matter that the close is slightly below the high. The point is that it broke the high, and the moment that it did that, if I understand the order block theory, I understand a lot about order block theory. This is one of the newer pieces that I recently learned from Michael. But you see how price was basically going up, and then price went down, and then now price broke above the bottom of this order of this down candle. I mean the top of this down candle. That now makes that into a bullish order block. So what does that mean? It basically indicates that price continues or plans on continuing going up. So it's a change in the state of delivery. So you see how price went up, bullish. The change was down, right? But not enough for us to say it's a change yet. But the fact that it went back up above this high, now we have an official change in the way price wants to deliver. And so this is telling us that this is now a set of a bullish order block. Okay? So if price broke this high, made these two into a bullish order block, then what I anticipate is going to happen is, of course, price is going to break the previous day high tomorrow, but also because of proximity, more than likely it's going to take out the previous week high and a daily BSL. It doesn't necessarily have to take it out tomorrow. And in fact, I would love to not see that happen because keep in mind, I originally made my bearish thesis for the week, right? But nonetheless, that was predicated on price staying below here. And if it was going to go up, I really didn't want to see it go into the what is this called? The weekly fair value gap, which it did, and what's worse, it went into the daily fair value gap and closed in there again. So that's a little too bullish for the bearish thesis for the week. I'm anticipating even it could have done that if price went in, like I said, and even went as high as the 9.4 and whatever else. Hell, even if it went to the CE and then wicked back down below, but it did. So all of this leads me to think that price is not going to close bullishly for the week. Bearishly for the week, okay? So anyway, the point is price is going to go here. At least take out this previous week high. That's where I'm anticipating price will more than likely go to tomorrow. But that doesn't mean rush in and believe that now. Let's say if I'm planning on going long, and let's just say you're doing multiple contracts. I'm still at the point where I'm, doing one contract at a time. But if you were doing multiple contracts, definitely you would want to start, scaling out of positions as you go along. But definitely I would target here, the previous day high at what price is that? That's 4414.25, which is today's high. Tomorrow will be the previous day. Okay? And then what would happen is I would want to see how price breaks above here. Well, not really. And then I would start to make this one the second price target that price would more than likely go to. Okay? Of course, no guarantees, but price may actually go here. Once price goes here, then what I would want to do is see exactly how this price reacts in this area. Okay? Also, you may keep in mind how price reacts in this area. But definitely once it goes here. If price literally comes here, takes out the high, stop around the CE and goes down, boom, then that's looking like a good, that's looking like potential where price, you may start to want to watch price to see if in fact it wants to continue going up, or if it wants to consolidate and then reverse, or possibly just reverse. Right here, because why? This previous week high in daily BSL is once again brings us right back up to the CE, right below the CE of the daily fair value gap, and also below the CE of the weekly fair value gap. So then that may indicate that price really still intends to go down. Why? If I go to the weekly chart, look at what happened. And I did mention this in the video, even though I was hoping that it wasn't going to get down to that because of the fact that price closed below the break of market structure. Once again, look at it right here. This was last week's candle, right? 10-9 to 10-14 or 13, 10-13, right? So 10-9 to 10-13, or 10-8, which was that Sunday technically, but 10-9 is a Monday to 10-13. So anyway, what eventually happened was, you see how this candle perfectly went into the weekly bearish fair value gap that we talked about, and it hit the slightly below the CE. But if you look at the candle, the chart very carefully, you see how it's still at the CE daily fair value gap, which is at 4430.62, which is technically, we could say it could be 4430.5 or 4430.75, right? Because 62 is perfectly situated in between both of those ticks. Long story short, the price went exactly to 4430.5. So we can say that it exactly reached the CE, but wick down. Another signature of price, what price tends to do, we see the algorithms tend to do this, is that price, when it does a long wicking candle like this from the fair value gap, usually price still isn't efficiently delivered. Why do we say that? Because remember, wicks, the algorithms tend to view wicks almost as gaps too. And so what eventually happens, and why do they do that? Because of the fact that when you have a full body candle, when you have a candle, the open and the close, that is the area where price mostly stay in between. When you have the wicks, what happens is that price usually quickly shoots up and then comes back down, shoots down and then comes back up. And so what eventually happens is, because of the relatively rapid pace of movement of price, it doesn't usually give a lot of time for buyers and sellers on a large scale to be able to get in and out of positions. And so that's why it's not usually an efficient delivery of price. So why am I saying all of that? So what you may tend to see as another signature of price is that price will go back up to efficiently redeliver price, which means the body now is going to make a full body right here. You see that? And then we want to pay attention to how it closes. Does it basically come sweep these highs? If it closes, let's say here or here, right, and basically just a little bit above if it closes a little bit above the previous week high, or if it closes a little bit below the previous week high, then in essence, now we're going to have accomplished a job of efficient price delivery. But that's also going to be more indicative that price still does intend to close down or go down. Not necessarily close, but go down from here, which is the CE of the weekly and or the daily fair value gap. So we really want to pay attention to how price moves once it takes this out, which I project is going to be tomorrow. Okay? We really want to pay attention to that. In the event price forcefully goes through here, this the previous week high in the daily BSL at 4430.5, if price forcefully and aggressively breaks through here, then what I anticipate is going to happen is that 9 times out of 10 price is going to keep on going. The last little kind of saving grace, let's just say it's saving grace, and hear me out. The last little kind of potential, I think, of price maybe intending to go down, not to say even this week, but it may start going down, but it doesn't mean that it's going to close down. It may start going down, is that if you pay attention to where price went to, or wicked off of last week, it wicked off of this order block, right? The bottom. And like I said, when that usually comes, that's a very strong price signature of price intending to go down. So when this happens, here we've got the CE, which is the middle of the body of the order block. Michael usually says that you can take the entire order block, meaning from the high to the low, and get the middle, which is the middle point, which is the CE. But I tend to see that for some reason, I just like just the bodies more, because usually the wicks can vary significantly, and like we said, it's areas where the price doesn't tend to hold anyway, and they usually are off just a few points or ticks, and usually price usually tends to respect both whenever I do my calculations. So for some reason, I just like the opens and close. But anyway, I see the CE. Why did I put this here? The point is, remember CEs, mean thresholds, whatever you want to call them. I just call them the midpoints, really, but I call everything the CE. Michael, I don't think calls it. He may call it the mean threshold. I'm not sure. But nonetheless, the midpoint. Remember, anything below that midpoint usually suggests bearishness. Above it suggests bullishness. So what I would want to do is, if price aggressively closes or goes above here, like it moves forcefully and aggressively past here, then the last little bit I would want to make sure is that how does price close in relation to the CE. So it may, does price close on a daily level, and quite possibly even on the hourly. Well, this is a weekly, so on a daily level, does price close consistently below here, never closing above the CE weekly wick at 4468.5, or does price continue to one day decide to close above it? If price continues to close below it, then that basically gives food to me. That basically becomes a strong indicator to me that price is still not done with going down. That once again does not mean this week. This week, for some reason, I think it's a done deal. Price has made its side very forcefully and decided to go up. That doesn't mean it's going to close. It's going to keep going up. It just means that in the end, price has become bullish, which means that 9 times out of 10, the price is going to close higher than it opened. That's what I mean by that. Before I was thinking that price was going to close lower, be bearish for the week, but now it's more than likely going to close bullish. The question is, will price continue to go up? Only question we have now for the week, or will it start to break down? This is going to be a big determining week, it appears as if. Just a little hindsight, Powell is speaking on Thursday, so that may be something that the markets is waiting for to determine that. But I'm a firm believer now that, the algorithms are doing what the hell they want to do based on whatever computations, mathematical principles, whatever numbers that they put into the system, you name it. They probably got inflation and interest rates and economic data and world political data, wars. They probably got all this stuff factored into the algorithms to know where exactly he wants to go. I don't know all of that. I'm not even gonna pretend to know all of that. But what I do believe, I am starting to really, I'm now a firm believer of, is that basically the charts already knows what it wants to do. The algorithms already know what it wants to do. And if you just pay attention to what the charts are really telling you, then no matter what's going on in the world, it's going to tell you its intention. And the beauty about day trading, you see how yesterday or today I was very wrong about my about what price was going to do. Yes, it was good that I recognized that I was wrong, because there were certain things I wanted to see happen that didn't happen. So right here, price price not staying below or going below the back below the break of market structure fair value gap was one. And then another thing I did say in the video, you guys can go back to it if you need to, how when price, you see how when price broke on 9/25, the week of 9/25, when price broke the swing low at 814, which would produce a break of market, which produced a market structure shift. The problem I had was that it did not create a fair value gap after that. You see how price went up. The fact that it went up and did not create a fair value gap, that was indicative to me that, yeah, maybe price was not done going down. So you see how price went up, but then when it went down into the fair value gap, that's what I was thinking, and then closed below the break of market structure. I was thinking, okay, maybe this is the case. But you see what happened? Because they had unfinished business, that's why it's still up. It wasn't a true break. That doesn't mean it won't go back down. It just means that we have more room for up. So now the next question is, the only question is, we know it's going to go up for for this week, right? The market is bullish for this week. That does not mean it's going to continue to go up much more. It just means that it's going to close up more than likely for the week. How far does it intend to go? A lot is going to be riding on these right here, the CE. We need to see how price reacts off of the previous week high, which is at 4430.75, which was or 4430.50, which was the CE of the daily fair value gap. We want to see how price reacts off the CE of the weekly fair value gap at 4438.75, and then we want to see if price plans on breaking much further up. So if it takes out that previous week in daily BSO and keeps running aggressively, we want to see if that order block is now going to stop it. And what I was trying to tell you guys too in the video is that when it comes to order block, you see how the order block price wicked off of the bottom of this order block, which is a bearish signature because it wicked off the bottom of a bearish order block. That's a great sign for price to continue to go back down. But just because of that, now we got to, the price usually, one of the signatures of order blocks is that when it does that, that doesn't mean that price is going to go down immediately. Now, sometimes it does, but oftentimes price usually goes up some to allow participants, they have to cue them and let them know, okay, we plan to go down. So this movement last week was the okay, we plan to go down signature. And then what happens is now for smart, it's alerting smart money, hey, we're going to go up. So now's your time to get in, right? And if you went long, hey, now's your time to get out of your positions, right? And so the move by going up is allowing those smart money individuals to go ahead and start to position themselves to get in. So the folks who are knowledgeable or aware of these things to get in their positions, or to get out if they're going long, if they were long. And then what eventually happens is price may go up some, but what shouldn't happen is we really shouldn't see this order block being violated. What do we mean? Price shouldn't break above, which is 4.5, the high, which is 4547.75. So this is the order block. It shouldn't break above that. Technically, as with all things, what's the part that we really don't want to see violated? That mean threshold, that middle, that CE. If price basically has difficulty closing above this, then that's indicative, or so meaning if price basically stays and closes below this, especially on the daily level, then that basically is indicative that price plans to continue to go down from here, which is great because it's right around the CE of the weekly fair value gap. It's still in the bearish fair value gap. It's using the order block as a price direction or traffic tool to direct it to go down. It's doing everything. It'll do pretty much everything we wanted to do. So that may be the tool that we need now to finally go down eventually and start filling these imbalances. And here's a beautiful thing of why you want to go to the higher time frames. Look at this on the higher time frame. We're on the weekly time frame. Notice how price is bearish here, right? And then it wicks up, right, into the bearish fair value gap, and it's still going up. But if you're still looking at it, price still has much more room for being bearish because it hasn't even taken out halfway of the fair value gap yet, right? And then we see other bearish things that could be taking it. So price, we really want to see its close below here on the daily level if it goes past here. And last case scenario, we want to see it not go here. Well, that's not the last case, and that's pretty much the most important scenario, but you definitely don't want to see it break past this high. But here, to me, this is like one of the most important things. You don't want to see it break that order block, okay? So this high. But nonetheless, and that's meaning even with the wick, when the price wicks, boom. If price wicks past it and then close down, more than likely price will still go down, but that just means soon after it's coming back to break it. That's what I usually find. So price may go down a little bit, but soon after it's going to come right back and break it if price wicks right past it. So usually we don't want to see it wick. Oh, excuse me, wrong one. We don't want to see it wick past this one. If it does, you definitely do not want to see it break this. If it breaks this, we can forget bullishness, bearishness. Now we would start questioning if price is looking to start reclaiming its highs. So it's going to break this high right here, and then quite possibly is it going to go ahead and break the all-time highs. All right, so that I don't anticipate to happen until we're talking about November, December, and we're talking about late November, December, quite possibly after. It could be even in the new year, but nonetheless, we shall see. Okay? But, so the point is, this chart looks bearish, but if you're looking at the daily, you see how it looks bullish? So this is one of the reasons why you want to go on higher time frames, use the higher time frames to guide you, because this is telling us for tomorrow, no ifs, ands, or buts, price is going up. Only question is where, okay? But overall, if you had longer term positions, you had stocks, you had leads, you had swings, positions, and things of that nature, you especially would want to know this, because you would want to see, okay, if price has any intention on going back down, or is it really set to start ripping and start making those highs. And so this would help to tell you that we're really in a position where it's questionable. So I would hold off. You want to see certain things happen to make that decision. And the biggest thing we want to see is if price, how price does in relation to the CE, and if it breaks that, how price does in relation to that order block. Does it respect it or not? And then we take it from there. Okay? That's pretty much it. So for tomorrow, what do I anticipate? Price is going to go out to take out the previous day high, definitely 4414.75, up 0.25. More than likely will go out to take out the previous week high. All right, but then I'll be looking closely to see what happens. Does price plan on continuing going up? And if so, then the next major target would be 4468.5, or does price, or anywhere in between that, to be honest, or does price plan on going back down? So that's it. Now let's do one last thing. Let's go to the hourly and see what the hourly is telling us. I believe the hourly is bullish, in my opinion, to So here, if we look at the hourly, you see price aggressively went above here, right? So today at 10 o'clock, it closed aggressively to take out um, the liquidity here, right? Which was caused from Friday, not the 9 a.m. liquidity caused on Friday. So that's good, right? And then price started breaking down, and then up, and then basically consolidated for most of the day that I saw. So here's the hourly wick. I would want to see where does price go in relation to this hourly wick, period. But one thing, that reminds me, excuse me, 1 year, 1 day. Go back to the daily. I forgot to say this, very important. So just because we know prices, we know, trust me, we know. Okay, if I don't go here, I'm gonna be salty a second day in a row. But I know, all right, that price is going to go here to the previous day high and then take out more than likely the previous week high. No guarantees in the previous week high, but I'm like more than like 75% sure it will take out that. But keep in mind that price usually goes down first if it plans to go up, right? And then if price plans to go down or be bearish, it usually goes up first before it plans to go down, right? So with this in mind, just because price is moving down does not mean anything. Remember we talked about efficient delivery of price? Here, price went up one way, so price usually has to come down one way. So one thing I would want to see is that I'm not worried about that. If I told you guys, go a little smaller so you can see more clearly now, right? That these two candles became an order block, right? So price was going up, price went down, then price broke this high, therefore creating this, turning these two into an order block. The second it broke this, even though it hasn't broke this, it now turned these two into an order block. That's like an intention or indication that price plans to go up. Okay? Of course, nothing is set in stone, but it's a strong indication that price plans to go up. Also, the way that price closed today, the fact that I wasn't anticipating to go here, it broke back past the break of market structure fair value gap. All of these things tell me price really plans to go up. The bottom line is we're looking at price going down. No freaking worry. Two things to pay attention to. Two levels where price more than likely is reaching for before it goes back up. It may just stop anywhere here, but 9 times out of 10, I'm thinking that price is going to go back to the CE of the daily order block. What's that? If you take the high of this order block and the low of this order block, because they're one order block, so we just take the high and the low, right? And then we divide it by 2, right? And then we basically, that basically gives us the midpoint. That number, once you add it from the bottom or subtract it from the top, that number gives us the midpoint, which is the CE of the daily order block. So this whole thing, these two candles make one order block. If there were 3 candles, it would make one order block. If there were 10 candles that were all down direction, that would make one order block. If there's 1 candle, 1 order block. So the point is, once you find the midpoint of whatever those consecutive candles are, right? Then what eventually happens is now you basically got the CE, the midpoint. So this can be an area where price is reaching to before price goes up, right? Not only that, another thing I tend to see that happens with order blocks is when price breaks above an order block, it likes to retest it. So price may actually go back down to the top body of this one. So it may actually go back down to the body top of this one to go up. If it was bearish, we would look for it to go to the bottom body and then go down, use it as resistance. The top here, because it's bullish, or we anticipate it's bullish, we anticipate that price may want to go back to the body top and then use it as support to go back up. All right. Now with all order blocks, we want to make sure it doesn't go past, close past the mean threshold. Wicks can do another thing. Wicks can it can wick down, but it shouldn't close down. And so since we're on the daily chart, then we'll say we don't want to see it on manifest itself on the hourly. So yesterday we saw, for example, how we were looking for certain moves to happen on the daily chart, and then I was saying, well, more than likely we wouldn't want to see it manifest on the hourly. And then what happened? It did manifest on the hourly. That was the break of market structure with price closing and staying above it. And so then that wind up becoming all the proof that we needed to know that price did intend to go up. And so if people were wise to that fact, then you would have made out nicely. Me, I was a little unbelieving that price did that. So at first I had a harder time in the market because I was more sticking to my thesis. And then finally common sense kicked in and was like, look, Carmel, you don't have to be married to your thesis, because in the end you want to follow what the hell the chart says. And that's once again the beauty of day trading. If the market decides to go up, you go up. You make sure you're on the right side of the trade and go up with it and make money. If the market decides to go down, you make sure you're on the right side of the trade and go down with it and make money. There's no reason to be married to a position. So the only reason I'm a little bit more invested is, one, because I find it cool to be able to think and interpret and predict where price is going, and actually does it. But two, also because I'm really looking forward to getting shares and getting leaps at discounted prices. So I really do want to see. I have a kind of a vested interest in making sure price goes back down eventually. You know, I don't really care when. I'm not really in a rush for it, but I do want to make sure that the lows have not come, which I really predict based on the charts, not based on what I want, but based on the charts, that's the case. And so if price goes back to those lows, then that'll give me opportunity to get things at the price that I want, to go shopping at the prices that I want to go long. But nonetheless, as a trader, I can care less, and I should care less. And I have to remember that as I go in on my daily, trades, in and out trades. So why am I telling you this? The point is, for tomorrow, price can very well, we can anticipate that if price continues to go down, it may, in fact, go down to the CE of the daily order block, or even the daily order block body top. Of course, it may decide to go even further down, but it definitely should not wick here, wick past this. How likely do I think this is going to happen? Very unlikely. So for some reason, very unlikely. And it would change a lot of the story then. And not only that, I would be questioning that the market is in a period of consolidation, where it's just going up and down, back and forth, back and forth. And in times like that, if that's the case, you would want to stay out of the market until it freaking makes up its mind. Okay? Well, not to say, yes, that's the best case, or you want to become really like a scalper, not even a day trader. You want to be a scalper in and out of positions. And so, nonetheless, that's it. The price can go down here. I'd anticipate it going to here. It definitely can't close below here, period. But it can wick. If it goes here, it's got to wick up from here. All right? And then that would be a nice entry. These points would be nice entries to take it back to the previous day high, possibly to the previous week high. And that's it. That's my analysis. So tomorrow, price is going up. I'll take out the previous day high at 4414.25, possibly the previous week high at 4430.5 in daily BSL. And then here at this point, we want to watch and see what price does next. If it breaks that aggressively, we're looking for 4468.5, or anywhere in between. But nice entry opportunities is around, give me a second, 4385.62. If price goes there, 4385.62, we're looking really juicy. And look at that now. Price is at 4398. So it doesn't even have that much more to go. If price goes to 4385, that would be a nice position to start getting in. But keep in mind that price could also go down to 4380 and a little further, but it shouldn't close. And it should definitely wick up. All right, so this is my market evaluation. I hope you guys found this helpful. I'm still learning, just like probably many of you are. So I'm just here to see if tomorrow things will go to fruition. And that's it. Remember, this is not financial advice at all. I'm telling you guys, I'm learning. So you take whatever you and do whatever you want from this. Do whatever you want from this. Challenge it, etc. But these are just my thoughts on the market. Okay? Take care, and you have a wonderful evening and great trading day tomorrow. Bye-bye.